Good morning. It's Monday, January 20th, about 6 a.m. Central Time, and it's a brisk Monday morning back here down in Florida, about 29 degrees. So when it breaks that level here, they cancel school, and school is canceled for most of the week for these guys down here. I don't know how they'd survive a winter in Chicago here, as I just got back from there. So overnight, the precious metals, they are slightly weaker after a slight pullback on Friday. We saw a lot of repositioning coming into this extended holiday weekend here and the inauguration of President Trump here. So looking at the commodity markets here, Bitcoin futures climbing to a fresh record as the U.S. prepares for the inauguration of Donald Trump with his second presidential term. This follows a weekend during which he launched a new cryptocurrency, and it really rattled the crypto markets. My phone, half of the conversations were asking if I was involved with the Trump coin, jumping in there, and it seemed like there were quite a bit of hoops and different platforms you had to use in order to get exposure to that particular market. Now, from a futures standpoint, we generally just are active in the Bitcoin and Ethereum futures contracts here. It looks like basically, we saw Bitcoin push up to the new all-time highs because of the fact that President Trump is considering an executive order designated the asset class as a national priority. Basically, what they need to do is launch this Bitcoin reserve. They also need to designate it as a different class on banks' balance sheets, and allows banks to have a custodial type of effect when it comes to these cryptocurrencies, and then its validity should be reaffirmed, and that's how the product goes to 150, 200,000 by the end of the year. Now, shifting gears to the energy markets, crude oil futures, they are falling over the past two trading sessions. Trump is poised to invoke emergency powers within hours of him being sworn in to unleash domestic energy production. Now, part of the reason why crude oil futures have rallied over the past couple weeks here is because of the fact, one, we broke out technically from a consolidation pattern. Two, I think the market was way too overly bearish on the current administration and how they're just going to ramp up production. It's not like you're just flipping a light switch and you could have 3 million barrels just come online. And then also the hard stance that we're taking on Russia and Iran and other countries out there with the turmoil in the Middle East. Now, it has died down a bit, and that's why crude oil futures are consolidating at these lower levels. So we're just going to want to keep an eye on the energy markets at this particular point in time here at the moment. Now, traders are also, as far as the gold market, are really concerned about the speech during the inauguration. Expect to see volatility later today here as he starts to shift his focus on these tariffs, U.S. fiscal policy, the implications on the dollar index, and also treasury yields and short-term treasury yields. Now, we are seeing yields creep up just a notch here in the overnight session after a big setback on Friday. So if you would like to open up an account with Blue Line Futures, please send an email to info@Blue Line Futures. And then also, we revamped our metals edge here over the weekend with some technical levels of importance, fundamental notes, seasonal tendencies, and also the commitment to traders report and our daily tactical ranges in the markets. If you'd like to see that on the gold and silver market, shoot an email as well and we'll get it over to you. Now, looking at these markets here and the overnight price action in there, you do have February gold 27.47 last, down about $1.10. The high of the overnight session 27.54, low 27.31. Silver futures, big setback on Friday and really kind of disappointed because we saw a recovery and a breakout in a lot of different asset classes, and it seemed like a rotation was going underway in these markets. You have silver down 8 cents, 31.05, high of the overnight session 31.31, small brief dip below that 31 level down to 30.90. You have copper futures pulling back a bit after achieving one of its highest levels we've seen since about 2017 here as far as number of days strung together in a rally. We're sitting at 435, down a penny. You have platinum futures down $3 at 962, and then you have the gold silver ratio at 88 to 1. We are seeing those treasury yields tick up just a little bit, but no real reaction here in the dollar index. Dollar index down about 28 cents. You do have all the grain complex all pushing higher after that bullish USDA report about 2 Fridays ago. And then we get that breakout to the upside, small continuation higher. So crude oil unchanged. And again, the U.S. equities all taking a small breather after such an explosive rally that we saw on Friday. Now, looking at the economic data that's coming out, we do have a bank holiday here today. No real real data coming out on Tuesday or Wednesday. It's really Thursday where you get the unemployment claims expected 220,000. You'll have natural gas and crude oil inventories, which are both expecting drawdowns. It's on Friday where you start to get some real data that can move these markets around a bit here. You're going to have your flash manufacturing PMI, your flash services PMI, your existing home sale, and then your University of Michigan consumer sentiment, and also the inflation expectations. Now you look at the CME's Fed Watch tool, looks that there's no chance here that the Fed's going to raise cut rates here at that January 29th meeting. You go out to March, it's about a 28%. You go to May, it's about a 45% chance that they cut. It's June where things start to really take shape here, where you got about a 65% chance that they do cut rates. And then the farther out you go, those probabilities go up. You get to about October and December, it's 100% chance at that far out that we'll have some type of interest rate reduction. Now getting into the futures performance year to date, of course, heating oil, your WTI crude oil, those are two of your best performing commodities. When you get to the metals complex, it's going to be copper up about 8%, silver up about 6.25%, platinum up about 5%, and then you get all the way down to gold up about 4%. So as far as the commodities are concerned, most of them are in positive territory since the start of the year. Now looking at the gold market, a couple things here. Gold has shown some resilient strength in 2025. It's matched two of the recent highs in 2024. Two dates that you're going to want to kind of circle on the chart here, and when you look at your daily chart, is November 25th and also December 11th. Gold futures came up to about this 27.50 level, and then from that point it pulled back. We've been trading at about $150 range, and it's really a massive range of consolidation at this point here. So your resistance points on the chart's going to be 27.6130 and then 2800 above there. Your pivot point's going to be about 27.18 down to 15. A break below there would probably indicate a washout to 2700. We probably got some stop losses below there where we could see a larger breakdown in those markets. Now looking at the silver market, silver futures kind of led us down this path again for the promises of a breakout and a glory, only to see its hopes dashed here with that big sell-off on Friday. We really got that overhead resistance about $31.90 to $32. The pivot point right around this $31.03, kind of where we're trading at here at the moment. Your first level of support $30.84, and then below that's going to be $30.55. So silver futures, they corrected about 2.14% on Friday, and it led that precious metals complex lower here, which causes last minute rotation out of different things that were China related. So you guys got any questions you want to talk, give me a call here, 312-858-7303. Remember, futures option trading, it does involve risk of loss, may not be suitable to all investors. Good luck, good trading.